Good morning, traders. Good afternoon, good evening, wherever you are in the parts of the world. Welcome you again back to GG Trading Company. From our recent videos that we have posted, we've had complaints, we've had comments about a couple traders that wanted us to cover really what Forex is, to start from scratch. And that's what we're here for today. We are here to cover what Forex is and understand what Forex is. So without wasting time, let's just drop into it. So what is Forex? Forex is simply, it's the short form of foreign exchange. In other words, Forex means foreign exchange. Or you can describe it as trading one currency for another. For example, you can change the dollar for the euro, or you can change the euro for the dollar. In other words, you can still change a dollar for Ugandan shillings. You can change a dollar for Tanzanian shillings, or you can even trade or exchange Ugandan shillings to dollar. So it's a means of trading one currency for another, profits also inclusive. A quick second, guys. If you find this content helpful, do not forget to subscribe, like and share, and also hit that bell notification so you can be notified next time we drop a new video. Check out our website, Telegram channel, and our Instagram handles in the description below. So that's how we can describe what Forex is in a short term. So going next, we have participants of Forex. So who makes up Forex? We have the central banks, aka the smart money. We have hedge funds, also known as smart money. We have the brokers that we use to trade. For example, we have XNS, we have XM, we have FX, all those ones you are going to go through. So we have retail traders known as dumb money. So who are the retail traders? It's we who are trading against or with these people here. So number 1, number 2, and number 3, these are smart money traders. And the dumb money, it's us who don't have enough capital to compete or even drive the markets, but we can still follow their footprints where they're heading. But how do you do that? That one we are going to cover them in more videos that we are going to be posting here on the YouTube channel about strategies, inclusive support and resistance that we have already posted here, how to trade it smartly, and couple more videos that we are gonna be dropping on this YouTube channel. So that will be for the next time. So these are the participants of Forex. So heading on to area of study. So what do you need to become a profitable trader other than the strategy that we are going to be teaching you guys? First of all, you need technical study. This is simply reading and interpreting a price chart. We have a platform that we are going to be trading with, and that is www tradingview.com. It is gonna be in the description below. So the other thing, we have fundamental study. This is simply reading and understanding fundamental news about the market. So we have also the sentimental study. This is identifying the positions of the traders in the market. So since we just dump money, we want to identify where the big guys or the smart money are positioning their money, if they're either going long or if they're either going short. So in other words, if they're selling or buying the markets. Types of currency pairs in the forex market. We have 3 types of currency pairs. This includes the major pairs being number 1. So when you hear about major, you'll automatically think something that is traded the most, right? The major currencies. So the majors include, first of all, the USD or the US dollar. We have the euro. We have the Great British Pound, indicated as GBP. We have Australian dollar, indicated as AUD. We have the Canadian dollar, and lastly we have the Swiss franc. So these are the ones that make up the major pairs. So secondly, we have the minor pairs. Minor pairs, these do not include the US dollar at all. So we're gonna be having the GBP, the Great British Pound. We're gonna have the Australian dollar. We're gonna have the Swiss franc. We're gonna have the euro. We're gonna have the Japanese yen. So among others. And number 3, we have exotic pairs. These include one major currency traded alongside an emerging or developing currency. So this will be USD traded against the ZAR, the GBP traded against the ZAR, Euro traded against the ZAR, and etc. We have metals and commodities. The metals that are traded in the foreign market include, we have gold, represented as XAU USD. We have silver, represented as SAG USD. We have platinum, represented as XTP USD. And we also have commodities such as US oil. We have indices like US 30, NAS 100 or NASDAQ or USTEC. We also have S&P 500. So these are the only metals and commodities and indices that we have in the market. So next we have currency pairs. So what are currency pairs? Currency pairs are divided into 2. The first one is the base currency. So what is a base currency? A base currency is the first pair that appears in a currency pair quotation. So for example, take the euro dollar. If you see here, the first that appears, obviously this one that appears the first here, that is the base. Yeah, so the quote currency is the second pair that appears in a currency pair quotation. So the euro, in other words, this will be our base currency, and the USD will be our quote currency. So in other words, the USD is our quote currency in this term. So next is buying and selling in the market. So buying is simply anticipating the rate of value of the base currency against the quote currency. So simply, if we take an example of this one, still, if we want to buy euro USD or the euro against the US dollar, so we are anticipating that the euro is to rise, right? When you are buying, you want the currency pair to rise. So in other words, if we are buying the euro USD, that means that the euro is much stronger than the USD, and in other words, we want to buy it up. So selling in other terms, simply you want the base currency to fall. So that's what we are talking about. So if we are selling euro USD, that means the euro is weak and the USD is stronger. So obviously the market has to fall. So another example. So we take the GBP against the USD. So in this case, the currency is the base currency is the GBP, and the USD is the quote currency. If we are buying the GBP USD, it means we are anticipating an upward movement in the GBP USD market. Excuse me. And selling, in this case, if we are to sell, we are anticipating a down movement of price in this market, in the GBP USD market. I hope that is clear. So terms used in the forex markets. So bearish market, a bearish market, this means the market is selling, or in other words, it is falling of price. Bullish market, this means that the market is buying. In other words, rise of price in the market. Ask price means buying, and bid price means selling.